Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw the market up around 1.37%, up year to date 11.43%. We look at what the market did over the past week, see that we started off relatively high and then we had a very steep sell-off. It was around when Coinbase had a direct listing on the NASDAQ. It started to fall, which then triggered the algos to start quick selling. So we saw a lot of downward pressure up until the close, and then opened up the next day higher, and we just saw a continued rise. Besides that one, little volatility, we basically see a chart up and to the right for the week.
And Knight, for our clients and viewers who do not know what an algo is, you want to tell them?
An algo is a trading algorithm. So it's a AI trader that trades equities for mutual funds, some portfolio managers. What happens is if they automatically sell, it can then trigger a lot of them to automatically sell. It's what we saw in 1987 with the flash crash. That was algos doing the selling. So we saw something much more minor had its effect. Now, the other big things that we want to talk about this week, talk about the infrastructure bill, the actual details that came out. We want to talk about Coinbase and other cryptocurrencies. And we'll want to end with, again, Rich's fun fact of the week. So let's start with the infrastructure plan and what you found out and what's interesting about it to you, Rich.
What we're seeing is that even though it's called an infrastructure bill, traditional infrastructure, which are roads, bridges, sewer, water, and let's even add broadband, actually only represent less than half of the $2.3 trillion infrastructure bill. And when we add in that there's a piece also for manufacturing, help us compete with chips and other key industries, we still have less than half of the money that's going to infrastructure in the bill. The rest of it is going for elderly care, nursing homes, and to support municipalities and states and to beef up their unemployment and other items. So that's sort of what the Republican argument is that this is more than just a infrastructure bill. And of course, the Democratic argument is that these are also needed in order to keep the economy going.
Overall, we were initially expecting a $4 trillion infrastructure bill. Then it got pared down to 2.3. And now what you're saying is it's more around 600 billion versus that 2.3 mark. What is overall your expectation is not really the infrastructure bill that you were hoping for when it was initially proposed?
Absolutely. We saw some of this back in 2008 when originally they said it was a stimulus bill and there'd be a big infrastructure piece. And it turned out that that was a very small part. Less than 10% was spent on actual stimulus spending, and the rest of it was just keep propping up governments and other programs. We're seeing something similar. Now, part of this is that it's believed that a reconciliation bill is what's going to be used in order to get around the 60 votes needed in the Senate. And in order to do that, they had to pare down, and there were restrictions as to exactly what they can include in the infrastructure bill. So some of it was to be expected. I'm a little bit disappointed because if we're only spending $600 billion or maybe $1 trillion and we have a $4 trillion need, that's still not getting us to where we want to be. But let's be honest, the past administration said they were going to do something and we didn't get any infrastructure bill out. So I'll be happy to get anything.
Yeah, I find it a little bit humorous, mostly because the reason why they put it at 2.3 instead of 4 trillion is they said, well, it's more likely for us to get it passed. We're not going to go straight for that 4 trillion. We're going to do 2.3. And then again, you see with the splitting up, they're putting in a lot more than just what we would necessarily call infrastructure. Now, those other pieces might help to stimulate the economy, but now shifting slightly to Coinbase cryptocurrencies, it's been a pretty wild week in the crypto space, and we haven't really talked a lot about it because in many ways, some cryptocurrencies, especially altcoins, ulterior coins, basically anything besides Bitcoin, could be a speculative play unless you are really clear on the underlying technology, which not many people are. So we've kind of steered away from it, but we can't really anymore considering that Coinbase just had their direct listing, kind of lackluster, I would say, in that they were expecting it to hit 100 billion as a market cap for it. It touched it for a second and then it fell back down. Coinbase is an exchange, so it's kind of like the New York Stock Exchange, except for cryptocurrencies. So you can sell Bitcoin on it, you can buy and sell Ethereum, and you can do a lot of different things. And they've obviously had an incredible first quarter. They released all their numbers right before they did their direct listing, showing that in the first quarter of 2021, they actually got more revenue than all of 2020 combined. So they had a lot of interest in this company before it direct listed, and it direct listed at about 380 a share, jumped to 410, and then all of a sudden fell all the way back down to about 320. And like I said, this is when on that chart, what we saw, it started to trigger other algorithms to just start selling off the complete broad market. The other interesting thing that we've seen with cryptocurrency is actually Dogecoin. And for those of you who don't know what Dogecoin is, it was initially created back in 2015 as a joke. It uses this dog, which was a meme, and it uses it as its mascot. And it's basically been a joke. It was trading for around, a fraction of a penny to start this year. All of a sudden, now it's trading at about 43 cents, shifting it to one of the top 10 cryptocurrencies. And the whole thing, even the creators actively created it as a joke. And now it's not. It's become just another way for retail investors to get into a lot of trouble. So it's definitely something interesting to see. Cryptocurrencies are here to stay, but it can be a very dangerous speculative investment. All right, Rich, fun fact of the week. What have you been looking at?
Oh, yes. Very interesting for me. There is a new type of force. It's like magnetism or gravity. They don't quite understand it or know it, but they notice that in a vacuum, things are behaving differently than they expected. And they realize that there's now a new force. And the good news was this was an American discovery. It was discovered in the Fermi Lab and just released the information this week. So here we are. We're now coming up with new theories and discoveries as to what's going on inside our bodies and inside the world.
Thank you for that, Rich. We're here to support you. Your money's here to support you. If you enjoy and like these videos, please share them with others. Like the video down below. Subscribe to our YouTube channel, and we'll see you again next week.